Today we're going to talk about what the blockchain and decentralized finance, physical and digital real estate, silver, and your portfolio all have to do with each other. My name is Arman and this is the Value Plug. And for more free content and free value, go ahead and subscribe and make sure you hit that bell button so that you get notified every time we drop something. All right, so before we dive deep into this content, the first thing that we really have to understand is what is the blockchain? Now, I'm not a blockchain developer and I'm not going to pretend to be one, but I look at this world from the perspective of a guy that's been in finance for over 15 years. And what I'm interested in is how it's going to apply to my money and your money because you're part of my audience. So how is the blockchain going to affect us is the big thing that we're trying to figure out. But the first question that we have to answer is what is the blockchain? Now, this is going to be an oversimplified explanation, okay? But the blockchain is a network of computers that are owned by individuals like you and me or private entities, or up until recently, even government entities started getting involved and actually diving deep into the world of the blockchain. Now, these computers, also known as rigs, are very powerful computers that they communicate with each other and provide the power that the blockchain framework needs to operate. These rigs are actually so powerful, in fact, that they need specialized hardware in order to operate efficiently to give as much power as the blockchain really needs. And they run 24/7, meaning they're running all day, all night. So there's a lot of power cost that's associated with having these rigs active. Obviously, if you're going to pay power, if you're going to pay for the cost of power, you want to be incentivized in some way. So the most basic incentive that these people who own these mining rigs and own these computers, the most common incentive that they receive is cryptocurrency. So they help to power the blockchain, they help to power the network that runs this whole thing, and as an incentive, as their compensation, they get paid in cryptocurrency. It may be Bitcoin, it may be Ethereum. There's a lot of different currencies that you can technically be mining when you have a rig active. But the idea is you have a rig, you support the blockchain, and in exchange, you get paid in crypto. In the early years of the blockchain, the only way that people could really make money was to either purchase, hold, and trade cryptocurrency, or to purchase and build these mining rigs so that they can support the blockchain and get paid as a miner, get paid in cryptocurrency. These were really the only ways in the early years that you can benefit from the crypto world, from the blockchain. However, it didn't take very long for new phenomena to be developed within this framework or inspired by this framework. Some of these examples are new blockchains and new cryptocurrencies, brokerages and online exchanges that allow trading, cryptocurrency staking, non-fungible tokens, also known as NFTs for art and utility, digital real estate, and the MetaVerse. Now, because this world is so quickly developing and there's such a high demand for anything, blockchain, crypto, NFTs, or MetaVerse, that means there's also a really high demand for the physical hardware that's required to build the mining rigs that support this entire system. These same raw materials are used for a lot of technologies outside the blockchain, including but not limited to computers and tablets, medical devices and wearable technology, automotive, consumer technology, temperature tech, pressure technology, motion tech, lighting, moisture and relative humidity, and so much more. And so, as a result of the constant evolution of technology, there's a great demand for these raw materials, namely silver. Now, why is silver so important? Now, apart from being used in jewelry and fancy cutlery, silver is one of the strongest electrical conducting metals that exists on our planet. Now, as we've already covered, silver is used in a lot of tech, including mining technology, crypto mining technology that supports the blockchain. Silver is used in things like CPUs, which is the central processing unit of a computer, or GPUs, which is the graphics processing unit, the motherboards and the circuit boards, the capacitors. Silver is used in a lot of things inside mining technology. So what's the correlation here? What's the connection between the blockchain and these computers and silver? Why is this important for us to know? As you may have already guessed, there's a limited supply of silver available on the planet. There's just a physical limitation on how much silver we have available. According to the US Money Reserve website, there's already been 1.74 million tons of silver that has been mined across the world. And there's 560,000 tons that still hasn't been touched. It hasn't been mined yet, which brings our total to 2.3 million tons of silver available in the world. A few key points to note here. From the remaining silver that has not been mined, so that 560,000 tons that has not been mined, there are 4 countries that hold most of that silver. Peru has 120,000 tons, Poland has 100,000 tons, Australia has 90,000, and Russia has 45,000 tons of silver left. So the quick point to note here is that those 4 countries, in the next few decades, if we look at and keep track of their economies, as the crypto world grows, as the blockchain world grows, and as the demand for silver grows, those countries are going to stand to gain a lot of power in the future global economy. Now, from the 1.7 million tons of silver that's already been mined, there's a group of people or a group of private investors that hold some of it, and some of it, or most of it, is being already used in things like jewelry, cutlery, and technology. Approximately 61,000 tons of silver is currently being held by large organizations like JP Morgan or the silver ETF, but the rest of the silver is in tech. From the remaining circulating silver supply, 7,500 tons per year is currently being used to develop new technology, and from that amount, only 15% of the silver is actually being recycled as old technologies leave the market and are replaced by new technology. It's estimated by 2030 that the annual usage of silver for technology is going to grow to 19,000 tons per year. Now, that statistic came around before the world of blockchain technology became as big as it is today. So if we anticipate that the blockchain tech world is going to grow alongside with the consumer tech world, the usage, the annual usage of silver will likely be much more than 19,000 tons per year, much sooner than 2030. Now, whether or not you truly understand it, the world of blockchain tech, the world of digital tech and digital currency, digital assets, it's not slowing down anytime soon. So the big thing that we need to note is that this world is at its ground floor and it's going to continue to grow for the foreseeable future. Now, since the world of blockchain tech and really the world of consumer tech relies so much on silver, the relative value of silver today is very, very underpriced and it's very undervalued. At the time of this video, we're in 2022, first quarter. At the time of this video, you can get an ounce of silver, depending on where you get it, for around, let's say, $25 to $30 an ounce. When the actual value of silver, according to its limitations across the world, its physical supply limitations, and the demand that exists for it, not just from technology, but private investors who are going to buy and hold on to silver, or jewelry that's going to be developed from silver, or cutlery, anything else. There's so many other things that you can actually do with silver. So due to the demand of silver and the great limiting supply that is available, the actual value of silver is much higher than $25 an ounce. It is estimated by people who really are very specialized in this part of the industry that the value of silver is going to be somewhere around $4,500 to $5,000. And that is going to happen very quickly because you're not going to see a gradual increase from the prices that exist right now to it reaching that $4,500. There's going to be a tipping point where technology is going to be so vastly manufactured. There's going to be different countries who are just going to go heavy into the tech development game. Outside of China, there's India, there's Japan, there's Korea, there's obviously the United States who wants to compete. But there are so many different countries who are going deep, deep into the world of tech that demand is going to kick in very quickly. And then you're going to start seeing increases in price of silver go from $25, $30 an ounce to $100, $200, $300 an ounce, $500 an ounce, $1,000 an ounce. And you'll see that happen in a more of a exponential increase than a gradual increase. So we already talked about what the blockchain world has to do with physical silver, right? So now let's talk about what the blockchain is doing to the world of real estate. As we covered earlier in the video, there's something called the MetaVerse that exists, and which is basically a digital universe. Technically, you're kind of watching this video already in the MetaVerse, in the digital universe. But the blockchain took it to the next level and Companies like Decentraland or projects like Decentraland, which is also known as Mana or the Sandbox, and these other places started developing these digital universes called the MetaVerse. And then Facebook changed its name from Facebook to Meta, saying that they're actually going to be focused very heavily on the world of digital consumer spaces. They started developing technology, which is the glasses that the partnership with Ray-Ban came in, and that's going to be available to the consumer market soon. So the world of the metaverse is a very, very big deal right now. It's pretty hot right now, especially at the time of this video. Now, what's going to happen within 6 to 12 months is still anybody's guess, but it seems like it's not slowing down anytime soon. In fact, the average plot of land that you can purchase within the metaverse costs somewhere between $300,000 to $600,000. To give you a little bit of perspective, in the United States right now, you can buy a house somewhere in, let's say, Middle America, somewhere in the Midwest. You can buy a house for $250,000, like a real legit 4 or 5 bedroom house in the physical world. A physical piece of real estate is now valued less than land in the metaverse. In some parts of the United States, you can buy an acre of land, 2 acres of land for $10,000, $20,000. So not even in the hundreds of thousands. You can buy a couple of acres for 20, 30 grand. You can't even buy a piece of digital real estate in the metaverse for that much. Now, apart from the prices of physical real estate and actually focusing on physical real estate, there's something else that you need to keep an eye out for when it comes down to the digital metaverse. There are companies like Amazon who have a web services sector. So there's something called Amazon Web Services, a great hosting service. You can do a lot of great things, and a lot of people left traditional hosting companies like GoDaddy and HostGator and all these different places to go to Amazon because of their speed, because of their pricing. I digress. But Amazon Web Services or another behemoth like GoDaddy could come out and say, hey, you know what? We're going to make this metaverse thing consumer accessible. Meaning, instead of needing to have $100,000, $200,000, $300,000 to get into the metaverse, you can sign up for a GoDaddy account that now allows you to build your store within the metaverse, that you can access it when you put on an Oculus or something like that. And instead of having to pay thousands of dollars, you pay $50 a month or $100 a month, and now you get access to the metaverse. And this is very enticing for small business owners. So people who are just starting a business or they're starting a mom and pop shop, they need to be able to get into the world of digital marketing and the digital commerce. And one of the more powerful things is this idea of, hey, what if we had a digital store that somebody could put on their goggles and come into our store and shop around and things like that. But dang, we can't offer, or we can't afford right now to put $300,000, $400,000, $500,000 down for something like that. So is there a service that allows us to develop this digital store but only pay $50 a month, $100 a month, something like that? So when you see, and you will see this, just a matter of when you see a company like Amazon Web Services or GoDaddy or any of these major hosting companies come out with a project like, hey, now you can buy and develop land in the metaverse easily with a few click of a button, kind of like you have a Shopify store. When that happens, you're going to see a very, very huge drop in the prices of physical real estate, the digital real estate, and you're going to see more and more people get into that world and start taking advantage of the distribution that's available on that platform. So as a business owner or as a consumer, these are some of the things that you want to look out for. The prices of physical real estate, physical land, developing physical land is going to be available to you right now, and probably in the next couple of 6 months, 12 months or something like that. It's going to be in a great area where you can go in and buy and develop. I know a lot of realtors who are waiting for this. I know a lot of developers who are waiting for this. But then in the world of digital universe, you also want to think about, when is this going to be accessible to me, where I can go develop my own shop in there, where I can go start even your own personal brand. If you had a physical location that somebody could come, or excuse me, a digital location. If you had a digital location that somebody could come and hang out and just put on their goggles and come visit you at your house or whatever it is, then you're going to start seeing a lot of consumers, a lot of people enter that world as well, which will make the prices of companies like Amazon spike up, or the companies like GoDaddy. Their valuations will increase because they're going to have a horde of new consumers enter the metaverse because of their new technology. All right, now it's time to get to the sweetest part of this talk, which is, what does all of this have to do with you? What does all of this have to do with your portfolio? Let's say you have a 401k or an IRA or some mutual funds or something like that. What does this have to do with you? If you've known me at all, if you've followed my content at all, you know that I'm very bullish on this concept called an index. I really enjoy indexing my retirement funds, my clients' retirement funds. But to clarify, I'm not talking about ETFs that are indexed, because we're talking about a contractual guarantee that your account will never go below 0%, meaning you'll never lose money. Okay, so the first thing that we have to understand is that there's a difference between an ETF that's an index of some portfolio and an actual indexed annuity that is offered through an insurance company that gives you a contractual guarantee that your account value will never drop below 0. So this is the first thing that we have to clarify and understand. There's a difference between these two things. And the things that I'm going to talk about from now on are going to be around indexed annuities. So this concept of whatever portfolio you want to have, whatever you want to be invested in, if you can protect it from its negative parts. So the Bitcoin market recently crashed, the stock market recently crashed, real estate always goes up and down. All of these things have ups and downs. And if you could avoid the downs and participate in the gains, I would assume that you would like to do that. And that's what an indexed annuity is. So we're going to be talking about that. Now, as I mentioned, an indexed annuity is a contract that you have with an insurance company. So let's say a company like Fidelity or a company like AIG or NLG, very strong company. They've been around for decades, sometimes centuries. They're solvent. So really strong companies. These are companies that own the banks. These are companies that bail out governments. Really, really strong companies. They've been around for a really, really long time. These are the companies that offer something called an indexed annuity. Now, the indexed annuity could be invested into a bunch of different indices. These are indices like the S&P 500, the NASDAQ, Dow Jones Average, the real estate markets, the precious metals markets, commodities, equities, and so much more. In fact, you can have your indexed annuity be invested in so many different indices that the only thing that's actually missing right now is the cryptocurrency market. Now, being that I'm a financial consultant and an insurance broker, obviously I'm a little bit biased towards these indexed annuities. And the main reason is because they truly protect our clients from disastrous losses when a crash happens in the marketplace. And since private corporations and government entities are now entering the blockchain space, and of course they want to regulate blockchain technology and they want to regulate cryptocurrency and the amount of money that people make within these spaces, insurance companies aren't too far behind from actually including all of this tech within their indices and within their indexed annuities, their portfolios. In fact, there's a lot of insurance companies that are looking for verification to happen within these smart contracts, and insurance itself is going to translate and transform into a whole new world, the way that it's offered and the way that it's transacted upon. But when we're talking about insurance products like indexed annuities and the offer up of the indices that are available within these annuities, we're not too far from insurance companies like AIG, Fidelity, all these behemoths, these massive companies coming in saying, hey, you know what? We want a piece of that space as well. And there are a lot of consumers that are just so excited about cryptocurrency. So why not get involved in this cryptocurrency space in a way that we get all of these consumers who are excited about this stuff to bring their money to us, right? So it's a profitable play for insurance companies to figure out a way to index some of these cryptocurrencies and offer it to the market that's so excited about cryptocurrency, about actually being invested into the cryptocurrency in the blockchain market. So what does any of this have to do with you? As an investor, your job is to learn as much as you can about as many things as you can when it comes down to the opportunities and the vehicles that you can invest your money into. The world of crypto and digital finance, decentralized finance, is very new and exciting, but it's still in its initial phases and it hasn't been very developed. It's true that you can invest $1,000 into a meme coin and within a year be a multimillionaire. But you can also invest your $1,000 and lose everything that you came in with. I know a lot of people, and you may have heard of stories like this, where somebody took out a mortgage against their house and they went into Bitcoin or they went into Ethereum or something, and because they didn't study the market, because they just listened to the advice of their friend who's a trucker, but they read into some things, because of these moves, they lost their mortgage in their house or they lost the value of their house. There are just so many things, so many catastrophic things that can happen to you. So the biggest thing that you need to do is really study and understand what you're getting yourself into. When my clients ask me about investing into a cryptocurrency, I don't discourage them. I'm invested into cryptocurrency. But I do encourage people, and I will encourage you as well, that as you make money within the crypto space, it's okay to take profits. It's okay to pull out some money and go somewhere that's a little bit more secure. Maybe in a next annuity. But if not that, take some profits, maybe go purchase some physical assets like silver, or maybe go put a down payment and buy your first income property, your first rental property. It's okay to take profits out. There are a lot of people that lost everything because of their greed. So don't be super excited by getting a 500%, 1,000%, 1,000,000% return in the crypto space, and you miss out on the fact that your account just performed at 50% positive, but you don't want to cash it out because you're waiting for that 5,000% return. So it's okay to cash your money out. It's okay to take profits and move into something that's more secure. I personally wouldn't care if you took some of your winnings and just left it in your bank account as liquid cash. Contrary to popular belief and to what a lot of these crypto gurus are teaching nowadays, there's nothing wrong with having liquid assets in your bank account so that you can maneuver freely without having to worry about, oh, I lost the value of this thing and I have to wait for it to actually return before I start taking money out of it. There's insecurity from being in volatile markets. So even if it means to just put some money in your bank account so you have a reserve of liquid cash, just steady cash that's sitting there, I personally don't care. As long as you take some of your winnings and you are secure with it. It's okay to be bullish, it's okay to be aggressive, but in the same breath, you need to make sure that you're a little bit conservative and actually take some winnings so that you're good if anything happens. So as we wrap, just a couple of points to give you so that you can take it and really internalize it. Be smart, don't be greedy, and study as much as you possibly can about anything that you want to invest your money into. And if you dedicate yourself, maybe it won't happen overnight, but if you continually study and 6 months from now, 12 months from now, 24 months from now, you master the world of finance, the new world, this new era of financial development. If you get good at it, and if you actually learn your way around it and learn how to maneuver within these waters, you won't be surprised to find yourself winning and winning big in the world of financial services, in the world of digital finance, digital equities, digital universe, all that good things that are available to us in the 21st century. So thank you so much for being here. I hope you enjoyed it. I hope you got value from this video. If you did, leave a comment. Let me know what you liked most, or if you have any questions that you want us to answer for you. Make sure you subscribe to the channel, hit that bell so you get notified the next time that we drop something. And of course, share this with as many people as you can, because the more you share, the more people that know about it, the merrier it is. And you want to win with your friends and family, I would assume. You don't want to win just by yourself. So share it, leave a comment, like it, subscribe, all those good things. My name is Arman Vakili. This was The Value Plug, and I will see you in our next video.